Well, markets are mixed in the final hour of trade. The Dow is higher while the S&P and Nasdaq are lower. We had a second day of testimony from Yellen, who remained mostly positive but has warned over the housing market. Meanwhile, her counterpart in Europe, Mario Draghi, has strongly suggested that we could see stimulus from the ECB as early as next month. Now we're joined by Keith Bliss. Keith, markets were mostly positive today, but it all seemed to fall apart in the past few hours. What's your analysis of intraday moves?
Well, what's happening against the stock market, what we've experienced in the last couple of weeks, is we're dealing with a lot of things coming at us in very quick real time, if you will. The earnings season, of course, here in the U.S. has been a major focus, and I've said that this is probably the most profound earnings season that we've seen in the last 8 quarters, primarily because of the reduction in Fed bank stimulus. So people are going to have to evaluate companies and therefore the stock market based on pure fundamentals. The other thing, of course, is that we're dealing with global economic data as well as U.S. economic data. We're always dealing with that, but we're very focused on what's happening in China. Is the slowdown real? Will they come out of it? Is Europe going to finally have some growth? There are signs that we see that there. And then lastly, the thing that we've really been dealing with is global geopolitical intrigue. And that's the one that took us down today. It seems that the Separatists in Ukraine are going to go ahead with a vote, much to the dismay of Vladimir Putin right now, and that's really unsettled the market here. But you strike a chord in this market. It's very tentative at this point in time, so any little thing may shake it one way or the other. So expect these whipsaws back and forth in the next few sessions.
And what are the likely ramifications if we do get some more stimulus or easing from the ECB next month?
Well, I think it would obviously be a positive for the market, like we've seen when other central banks, most notably the Fed, have put stimulus into an economy. It'll certainly be a positive for the U.S. equity market from the multinationals that sell a lot of goods into the European theater. Of course, the thought with any stimulus measure from any central bank is that it will spur economic growth, and therefore there'll be investment, and we'll be able to sell. Any company that sells in that theater will do quite well. So I would expect those traditional companies, again, the mega cap, the super cap companies that are traditionally in the industrial sectors, some in the technology certainly, but some in consumer discretionary sectors will lift, some in the financial as well. So if we see all those sectors get a lift and a boost from the stimulus, then we should see the equity markets rally as a result.
Now you've talked about a lack of conviction, a lack of direction in U.S. equity markets. What's needed before that's broken?
Goodness gracious, the $64,000 question you've hit me with. I personally think that we're going to see, and we're going to be in a trading range for quite some time. There's just not a lot of conviction. You see it displayed not only in orders that we handle from customers. There's as much buying as there is selling. You see it played out in the hourly, daily, and weekly charts. If you're so inclined to look at such matters, you just see it playing out that way. So the only thing that I think we would see as a catalyst to the upside is certainly a reduction in tensions over in Ukraine, certainly stimulus from the ECB, continued growth here in the U.S. markets, and hopefully the data that we start seeing later in May and early June when we don't have weather-related impact will point to that direction. Those would be catalysts for an upside. Short of that, though, we will remain in a trading range probably through the summer, and any destruction of all those points that I just pulled out may see us pull in a little bit. We're at a very tentative spot in the marketplace, and it wouldn't take much to push it one way or the other.
Okay, thank you, Keith. That was Keith Bliss of Catone, and I'm Jane Searle for The Street.